When people start trading and investing, they think that all markets are absolutely isolated. They think, for example, that gold and silver are just dependent on gold and silver. That random cryptos just exist in complete isolation. That random stocks have nothing to do with major market indexes. This couldn't be absolutely further from the truth. Markets are not isolated. Smart money rotates capital across asset classes based on structure, volatility, and macro factors. It's very important to understand these 5 buckets. For example, if we looked at forex and the DXY is coming down, that should rally the stock market, also the crypto market, and also commodities. Unfortunately, very few people know of these connections. For CTKS students and elite service members, what we make sure that we do is to understand cross-asset allocations and directional intercorrelation as well. It's very important to know if risk is coming in or out of the market, and the cheat sheet is one of the best ways and easiest ways that you can assess all markets, just in one single page. In this video, we're going to go through the cheat sheet. I'm going to go through what I do inside the profiting course. My focus is to give you an institutional edge, to help you to predict broader market moves, to spot capital rotation, avoid false signals, and most importantly, to build institutional level skill. That's what we're all about. And please bear in mind, it takes time for capital rotation to occur. We're going to do the rapid run-through of the cheat sheet, and I'll also give you some context from the broader markets. You'll find it incredibly valuable. Let's run the numbers. The cheat sheet has 7 rows. Row 1 and row 2 measure risk on and risk off behavior. Row 3 and row 4 are the stock market. Row 5, 6, and 7, the crypto market. Typically, we see inversion between row 1 and row 3, also row 1 and row 5. This is very important to understand. Let's have a look into row 1. Many people focus on one specific chart. Just say that we're looking at Bitcoin and we're saying, what is Bitcoin doing? You might notice that I've inverted the price of Bitcoin because row 1 should do exactly that. When we look at row 1 components, they should be coming down, whilst Bitcoin, the stock market, and crypto is going up because they're inversions. Now we can see that the VIX has done a very good job of tracking the inversed Bitcoin. Now, just to make sure that you understand what I'm talking about, I'll uninvert the scale. So you can see that's an inverted scale. You can always tell inverted scales because the little number is at the top and the big number is at the bottom, and it shouldn't be like that. What is the cheat sheet telling us? It's telling us that risk on is on, but it's also basing. One thing to understand, the stock market is very slow. It takes time for these signals to develop. It takes time for them to turn around. One of the things that we looked at, inside row 1, we look at the VIX, the Dixie, US dollar currency index, dollar yen, the 10-year, the 2-year, and oil. One of the things that we noticed recently on the ceasefire arrangement in the Middle East, oil absolutely plummeted. People were expecting a continuation, but as I posted on X, oil had so much structural support there, it was unlikely to just keep on going down. It was likely to bounce at best and consolidate at worst, and we've seen this consolidation. Now, what happens if oil starts to spike up, the VIX starts to spike up, the dollar starts to spike up, and we would expect dollar yen to do so as well? What if we see the 10-year come up, the 2-year come up? From a learning perspective, it's very important that you understand what these things actually mean. And for the profiting students, don't forget in week 2, we go through the prediction of tops and bottoms on the VIX, the DXY, all of these pairs. It's very important that you be able to comprehend when a top or bottom is coming into the market. In fact, it's vital. What we can see from looking at the first level of risk inside the markets through the cheat sheet, we got this basing action and we could get a bit of a spike up. So just be aware of this. Could we also continue coming down? Yes, we could. But as you get further and further into basing action, the probabilities of that actually start to fall dramatically. Therefore, we should be prepared and not scared. So just keep this in mind. Of course, we need to look at structure. But this video is more about cross-asset comparison. If you're liking the content so far, please smash that like button and don't forget to subscribe. We have one of the best communities on YouTube and we'd love to see you each day. Row 2 of the cheat sheet is incredibly important. You can think about it as the inverse of row 1. So row 1 is literally measuring is risk increasing. Row 2 is measuring is risk decreasing. What you will typically find, if the yields come up, the commodities will get hit, so that's something to just keep in mind. Also, if the DXY comes up, that will push dollar-yen up and the euro dollar and the Aussie dollar down. Just going back to the start of the video, I said if the DXY is coming down, that generally places upward momentum inside the major market indexes, which is the actual thing that pushes the stock market up. If risk is coming into the market, that means that the crypto market will feel it first. That's why we do the overlay of Bitcoin, that blue line, across every single chart. Okay, now you've got some context on that, let's have a look at row 2. We can see that row 2 is looking pretty good. From a junk bonds perspective, there is definitely risk on inside the market. When we look at gold, we saw gold come into this structural overhead resistance level at 33.80 and it fell like a brick down to that 32.95 level and bounced. This is exactly and precisely why we need to look at structure, and all of these indicators, structural indicators, are available through the service. We can see that the euro dollar has been going up while the DXY has been coming down. We absolutely anticipate this behavior. We expect it. And we can see also that the Aussie dollar is moving pretty much in lockstep with the euro and the inverse of the DXY and dollar yen. Again, we expect this. Therefore, when you think about gold, gold is very geopolitically sensitive. So it's sensitive on wars, it's sensitive on conflict. And you can see silver is a little bit more broadly based. It's a more industrialized metal. But it's still gold's little baby brother, so they do hang out together. So if gold goes up and down, think geopolitical tension, crises, all of those good things. There is a big dance that happens between these different charts inside the different rows. And if junk bonds is coming up, it means the VIX is decaying, the S&P 500, the Dow, the NASDAQ, the Russell, Bitcoin, total crypto market cap, they're all coming up. With this kind of thinking, you're thinking like an institution, and that is what you must do. Predicting tops and bottoms for the euro, the Aussie, gold, silver, copper, the S&P 500, and all of the crypto market. It's important that you give that some real attention over the coming weeks. Now that we've understood row 1 and row 2, row 3 we would expect to go up. The S&P 500, the Dow, the NASDAQ, and the Russell. And when we look at the S&P 500, it's coming up, but it's increasing at a decreasing rate. Why is that? Because we know the VIX is basing. What about the NASDAQ? It's coming up quite nicely. What about the Dow Jones Industrial Average? Also doing well. Look at the Russell. Russell is super sensitive. Russell is a very sensitive child. Going into row 4 of the cheat sheet, we can see that Apple has been under pressure. It's been weakening. What about Tesla? It's been smacked around the head with a cold fish. Microsoft has been doing really well, and Nvidia doing well also. And when we look at strategy, which is still MicroStrategy, and what has it been doing? It's starting to flatline. And something quite interesting, the Bitcoin miners have been going nuts. Let's have a look at the crypto market, which is row 5, which is total crypto market cap, Bitcoin and Ethereum. We can see that inside the total market cap, we've been just pinned between this 3.25 line to the upside and to the downside. At the current time, crypto is selling down. Now, we could have some indications as to why that is happening. And if you look at row 1, I'm giving you a bit of an indication. Now, don't forget, things take time to play out, but it's better to be aware than to be caught off guard. In terms of Bitcoin, Bitcoin is trading in a positive and negative CTKS gap at the moment. It's inside the gap about a little just below midway. We have structural support around that 106,000 and structural resistance around that 109. When we look at ETH came in and tapped the 2,500 structural resistance levels, and there were quite a few of them. Note this, it literally took off from 2420, hit the structural resistance, failed, had negative structural attraction all the way back down, and has just lost that structural support as well. And thank you to everybody who let me know what they're trading. So when we look at Pepe, Pepe has also just fallen below structural resistance at the current time. A lot of people like to look at moving averages, so when we look at the 50, the 100 and the 200 SMAs, Bitcoin's price is below all of them. Looking at things structurally is incredibly important. Let's have a look at row 6. All of these structural levels are available through the service. Now, when we look at Litecoin, we can see that $86 is where structural resistance hit, and there is a lot of structural support around the $84 mark. And Litecoin is currently $84.49. Bitcoin Cash has been really volatile, so that's actually one to keep on your radar. But it came up to the 505 mark and rejected. It also rejected at that 498 mark and is under structural resistance at the current time. It's looking like it's a little bit weak, but always just bear in mind, price is always moving in a wave. It can do things like this. So just keep on watching what price actually does relative to structure. If Bitcoin Cash does come down, and we would expect that means that the VIX is starting to come up and the DXY and US oil, you got the idea, the row 1s. And that should be confirmed by the euro coming down, the Aussie dollar coming down. You get the idea. So if you look at Bitcoin Cash, around that 465.50 is quite a good degree of structural support. For BNB, you can see overhead structural resistance at the 652 and underpinning structural support just a little bit below 640. Ethereum Classic is starting to look a little bit dicey. We can see that it's just lost this area of structural support, but we have an area of structural support around that $16 mark. One thing that I find really helpful when you're looking at Bitcoin Cash, that is a proxy for Bitcoin. So if this is coming up and coming up hard, we would anticipate that Bitcoin is also coming up. But if it starts to weaken and starts to sell down, expect Bitcoin is doing the same. Bitcoin Cash is really sensitive. When looking at row 7, which is the crypto market, we're looking at ADA, Cardano, Solana, Dogecoin, and XRP. If we look from this perspective, it's a little bit tricky. Where on earth is the structure? Turning the structure on for ADA Cardano, we can see a lot of structural support at that 53.80 mark. And we can also see that ADA has rejected around that 56.50 level of overhead once structural support and turned into structural resistance. A bit of a gap in there as well. This is favoring negative structural attraction down to the 53.80 mark. But how can we talk about Solana? Where is Solana going? The very simple answer, Solana, as always, is going to structure. Solana's major structure was up here around that 146, 147 area. We can also see that this one structural support has turned into structural resistance just a little bit above 144. We do have an area of structural support where we expect price to interact. And this is the power of the CTKS method. We know already where smart money and the algorithms will step in to support price and where they'll step out to push price down. Structure gives you superpowers. And let's have a look at Doge. What about Doge? Where is the structure sitting inside Doge? At that 16,023 mark, there was fairly substantial structural support, but now we're underneath it. Is it turning into structural resistance? A little bit too early to tell. It realistically depends on what Bitcoin's price is doing, but it's not looking that crash hot at the current time. And if we look at XRP from a structural perspective, wow, this looks much, much better. Look at all this underpinning structure. It's like we're looking at ADA and XRP coming into really, really good structure. This is exactly what you want to see. If you haven't done so already, I would urge you to go across to ctksmethod.org and just pick up the free cheat sheet. The cheat sheet is an absolute ripper. It will give you so much institutional grade knowledge. You'll be able to impress your friends and family members by talking about yields, forex, crypto, everything, stocks, wow. And you can speak with a lot of authority. Please let me know in the comments what was the most valuable insight you got from this breakdown. I'm really looking forward to your thoughts. Ultimately, everything comes down to structure, so when you understand how structure works, it is a literal game changer. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.